We've had a lot of enthusiasm at the beginning of the week. That's built into European stocks as well about what China can deliver. Now, is there some scepticism setting in? What do you see?
Yeah, there's certainly the rally that we saw in equity markets that you were talking about, Anna, has run out of gas somewhat. Today, a little bit of a negative number on the screen. And it's the usual story, right? The market is saying, show me the money. OK, it's all very well making these promises and pledges, but we really need to see some detail here. And the concern is that while we have the Economic Working Group meeting, they didn't give us anything before the meeting that might, kind of give the market something to hold on to. So it's a bit of a wait and see again. And every time that happens, people start to, take a bit of profit, get a little bit nervous as well. We saw outflows from some of the onshore ETFs yesterday. So that points to this idea there's a little bit of skepticism there still and a little bit of concern.
Paul, why do I care about today's CPI print out of the United States? People keep telling me that it's not going to influence the Fed's decision on whether or not we see one more rate cut this year.
That's a pretty good question, Guy. And I think that, the way that you're framing it is probably right, because the market is 80% certain that the Fed is going to cut in December. That's the way that the pricing is leaning. So it would take a big upside surprise in the CPI to dislodge that. And while we're expecting a modest acceleration, nothing like that is really on the analyst's radar. So it would be an upset. So I guess, what we could see on the flip side of that actually would be a bond market rally if the number does deliver and we get confirmation that the Fed is going to cut in December based off the numbers, because the market positioning in the bond market is pretty flat at the moment, pretty neutral. So again, there's scope for a little bit of a gain. I think it's also going to start talking about next year now. There's only 2 cuts priced in for next year, assuming that one happens in December. So, could be done by mid-year. And people are going to start to think about how sticky is that inflation? Will the Fed be able to continue cutting beyond the end of this year? And that's going to start to become a factor, particularly as we get closer to Trump taking over as the president as well.
Well, Paul, speaking of next year, let's talk a little bit about China as well. We are getting reports at the moment that Chinese policymakers may be considering a weakening the yuan in 2025. If that move were to come to fruition, what would that signal? What's the logic there?
It's straight out of the playbook the last time that we had the tariff wars with Donald Trump in the presidency, right? China allows the yuan to weaken, and that offsets some of the costs that are added onto the goods that are shipped abroad for the tariffs, so kind of cancelling out that impact. It is one of the things that's in China's armory, and the report that's out today from the competition is talking about only a modest weakening, really, compared to some analyst forecasts, which are for a much radical drop all the way to 8 yuan per dollar. So it's one factor, but we're also seeing China pushing back in other places, talking about sanctions on NVIDIA, that sort of thing. So there's going to be lots of tension and market volatility as a result.